Should you invest in meme stocks in 2025? This question is more important now than ever. Because once again, the internet is pumping hype. Social media influencers are calling certain stocks the next big thing. People are saying, this stock will 10 times. This is going to the moon. And don't miss your chance. And millions of people are starting to believe it. But before you click buy, we need to break down what meme stocks really are. Why they go up fast. Why they crash even faster. And what smart investors should do in 2025. Meme stocks are stocks that do not rise because the company is profitable. They rise because people on the internet hype them. The price goes up simply because everyone decides to buy at the same time. It's not about business performance. It's not about revenue. It's not about earnings. It's about attention, hype, and crowd psychology. The best example was GameStop and AMC. Those stocks didn't become valuable because the companies were suddenly more profitable. They became valuable because millions of people teamed up online and said, let's buy. This forced hedge funds to panic. It triggered short squeezes, and that sent prices skyrocketing. Some people made life-changing money, but many more bought in late and watched their investments collapse. The pattern is always the same. Someone on social media calls a stock the next big thing. People start sharing screenshots of fast profits. Then everyone rushes in because nobody wants to feel left out. This is called FOMO, fear of missing out. But what goes up fast can crash even faster. And with meme stocks, they always do. So why are meme stocks coming back in 2025? Because markets are emotional again. People are frustrated by slow growth. Investors want fast gains. And new platforms like TikTok, Reddit, Twitter, and Discord can spread hype in seconds. It only takes one viral post to send a stock flying. But that same hype can disappear just as fast. The same crowd that buys can suddenly sell the moment fear kicks in. Here's the biggest problem. Meme stocks give you hope, not stability. They make you feel like wealth is just one lucky trade away. But that's not how real wealth is built. Real wealth grows through consistent investing, not gambling. Yes, you can make money from meme stocks, but only if you get in early, and only if you get out before everyone else sells. This is nearly impossible to time, because nobody rings the bell when the top hits. Nobody warns you before the crash. The price just drops fast. And most people freeze and lose even more. So how do meme stock cycles form? It starts with a story, a narrative, something emotional. People don't invest in meme stocks because of financial reports. They invest because it feels exciting. It makes you feel like you're part of something big. You feel smart. You feel ahead of the crowd. And that's why meme stocks are dangerous. They play with your emotions. Crypto has followed the same pattern. NFTs followed the same pattern. In 2021, everyone believed they were going to get rich fast. But when the hype disappeared, most people were left with losses. The same psychological trap exists in meme stocks today. So instead of asking, can meme stocks make me money? Ask a better question. What is the company actually worth? What problem does it solve? Does it make money? Is revenue growing? Is debt increasing? What does long-term demand look like? If you cannot answer these questions, you are not investing. You are gambling. And the market is ruthless to gamblers. Let's be real. Most meme stock hype comes from people who already bought in. They need new buyers to push the price higher. They say, bro, trust me, it's going to explode. But the only reason it would explode is if you buy and push the price up for them. You're not joining an opportunity. You're becoming their exit liquidity. So what should smart investors do in 2025? You don't need to avoid meme stocks entirely, but you must treat them like high-risk bets. Only use money you are willing to lose. Never put your emergency savings into hype stocks. Never invest because a stranger on the internet told you to. Never invest because you're afraid of missing out. Real investors focus on fundamentals. Strong companies with real income. Businesses with long-term growth potential. Sectors shaping the future like artificial intelligence, renewable energy, biotechnology, robotics, cloud computing, cybersecurity. These companies don't rely on hype. They grow because they provide real value. The truth is, most meme stocks will not survive long-term. They burn cash fast. They rely on attention, and attention always fades. But real businesses with strong financials? They build wealth slowly but consistently. Wealth is built through patience, not excitement. Discipline, not hype. Strategy, not impulse. If you want fast profit, you'll probably lose. If you want long-term wealth, you'll win slowly but surely. So if you still want to play with meme stocks, here's the safest strategy. Keep 90% of your investments in stable, proven assets. Index funds, blue chip stocks, high-quality ETFs. Let this be your foundation. Then use only 10% or less for high-risk bets like meme stocks. This way, even if hype investments crash, your wealth continues growing. This is how smart investors participate without getting destroyed. Remember this: the market will always reward patience, but it will always punish greed. If someone promises easy money, walk away. If something sounds too good to be true, it is. If a stock is rising only because the internet said so, be careful. Your financial future is too important to gamble with. Make your decisions with logic, not emotion. You are not in a race. You are building a life. The person who stays calm wins. If you want more videos like this, make sure to subscribe, because I will keep bringing you real financial lessons that actually help you grow. Not hype, not shortcuts, just the truth.